Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 21st, 2022. Let's take a look at most beaten down profitable stocks. Here is a very good name here. Fortinet, a top leader in the cyber security. This company stock has been dropping off of late. As many of you know, all the governments and big corporations, they all need cyber security, and this company is a top leader, and the stock is pulling down off late. It's a great time to buy some Fortinet and add to your portfolio. So with that, we look at many other stocks and see what's worth buying here. So with that, let's jump in. We'll start with the market update. Look at stocks with volume more than 1 million shares and also positive net margin, and of course the beaten down stocks that can bounce back. So with that, let's jump in. Look, from a fear and greed index perspective, we are at 39 right now. So just keep watching here. Fed is making a statement, and the pendulum oscillates from 50 to 39. So we got to be careful here. It's really Fed driven market here. I can see us coming down to maybe 25 or even 20 for that matter. Just a month ago we were around 20 or even 13 or so. So I can see us going back to around 15-20 range. So that will make stocks to come down a little more. So the Feds are really leading the market here. They're really dictating where the market will go. So with Fed not being our friend, I can see us going down further. We got to be watching out for the Fed. They might increase by 50 basis points, and market can pull back because of that. So let's jump in here. Look, from a market news perspective, we got here our Chairman Powell. He wants to tame the inflation. He thinks it's absolutely essential, and he wants to do a 50 basis point rate hike. So if he does that, and if he uses some aggressive language, watch out, stocks will come back down. And stock futures are down after it's trying to go higher, but still it's down. Look at the bloodbath here. Look, Dow Jones Industrial all the way down, nice downturn here. Nasdaq even more severe downturn here. And we got S&P also down. The tech-heavy Nasdaq, as you can see here, it has pulled back 2%. This one is more severe than the other two indices. And in the futures market, look, all the indices, the future stock indices are down, and even oil is down. So interest rates are going higher, as you can see here. The moment Fed tries to do 50 basis point hike, you can expect interest rate to go higher and bonds to sell off. So with that, let's jump in and take a look at the market here. From a market perspective, look, very jittery market, very volatile. It's a trader's paradise. It's been coming down, going up, coming down, going down. If you have some patience and watch for a couple of days, stock will come down. The key is to not to buy when the market is up. Easier said than done. But the person with the patience here will win out, because market comes down and goes up pretty nicely, and our job is to sit tight and buy only when market is down. Like you can buy some today, you could buy some tomorrow, and there'll be some positive news, stock market will go higher. That's the theme here of late. This whole year market is going up and down very violently here. So it's a trader's market. Look, crude oil, it's still in a nice bull market here. It came down slightly. Some of these slight pullbacks is a good buying opportunity. This is gold. Gold is also a good opportunity to buy. Gold is also in a bull market. Crude oil is also in a bull market here. Energy is a good one to buy when it pulls back like this, and slowly adding when market pulls back nicely. And look, bond is getting sold off here big time, mainly because Fed is not helping. Fed is not buying bonds anymore. They're actually selling the bonds. Interest rates are skyrocketing. This could be difficult for tech stocks, especially the growth stocks with not too much earning. All right, now let's jump in and look at the ETF. From an ETF perspective, I love looking at ETFs. It will tell you where the market is headed. Look, bloodbath in one day. Most of the major ETFs are down with the exception of US dollar. Look, UUP, US dollar is up. Typically, US dollar goes up when there is an interest rate increase in card. That's why US dollar has been rallying. Look here, it's been rallying almost nicely here. So that's why it's a little difficult for multinational companies, and even crude oil and gold will also come down if the dollar goes higher. So generally commodities will become lower when dollar goes higher. But this time we have a different story with the oil shortage, energy shortage. All right, look, we got SPY, which is a mother of all ETF. Nice downturn here, down in one day, and even as you look all the way here, 6 months also it's down here, and this one is down. Let's see here, it's down 8.7% from 52-week high. It's not yet in the correction territory. Look, nice volume here, 84 million shares traded here, and from a Bollinger Band perspective, it's really hugging the lower band, as you can see here. Just 1% above the lower band. It's really sold off big time here. Look, from a moving average perspective, it's below its 5-day, below 10-day, below 20-day, even below its 50-day moving average. So that's why it's a bearish sentiment right now. But on a VWAP perspective, VWAP is telling, hey, this wants to go higher, at least to 441 pretty quickly. And also 20-day VWAP is saying 447, even higher price. That's why even with this big drop here, there is some expectation SPY will reach its VWAP. That's why VWAP is a little higher. And then got QQQ here. QQQ, as you can see here, completely sold off. Look here, QQQ is down 18% from 52-week high. It's in a correction territory. And look, this one is down in all the way 5-day, 20-day, all the way to 50-day. And this is also slightly hugging its lower band in Bollinger Band here. So it's also negative. So we got few more here. Keep watching the RSI here. RSI is pretty much, many of these are down big time here, with the exception of consumer staples, which is pretty strong here. Look, RSI is very good, and XLU utility is also pretty good here, high RSI. My favorite time to sell put options is now, when the market sells off big time like this. I'll be selling some put options for SPY, QQQ especially. That will make a good amount of money selling put options. And we also have SMH, which is another great one to sell some put options. Look, SMH has dropped down big time here with the IV percentile 62. It's also a good one to sell some put options. And then you got IWM. It's also a great one with the high volatility 48. You could make some good money selling put options. So with that, keep watching IV percentile. If you're a put option seller, look for IV percentile high, and you could make some good money selling put options way below current stock price. All right, now what we'll do is we'll look at few stocks to buy. So from a stock perspective, look here, 1 day bloodbath here, down big time in many of these big names here. So we got Alcoa top of the list here, aluminum company, as many of you know here, down 16%, big time down. I also made sure all these companies have got positive net margin. Keep watching net margin. None of these are money losers, all are money makers, good money makers here. And Alcoa, as you can see here, it's just 4% profit margin here, and they have nice cash, $1.8 billion, and free cash flow also is free cash flow positive. But look what's going on here. They're below Bollinger Band, lower band here came tumbling down here. And this company has made good amount of money for investors. Look, 1 year, 2 year, 5 year, they've done good, made some good money here. So after this drop, it may be okay to slowly look into Alcoa here. I think they can do well. Looks like they had their earnings. Look, their next earnings is 720. So at these levels, after this huge big drop, you could buy some Alcoa. Look at the RSI here, completely sold off here. And then you got few more here. Keep watching 1 year, 5 year performance here. Go with the one with nice performance here. So we got LXU here, LSB Industries, $22 stock. Look, it's been doing very well in even in 1 month, 3 month, all the way to 5 year. And right now RSI is 50, middle of the road. You could look at this one also here. Even though debt to equity ratio is high, look, they do have a nice current ratio here. They got money to fulfill short-term obligations. So if you could look at this low price stock LXU here and buy into this weakness here, you might do well here. So this stock is in Bollinger Bands. It's about just below its lower band, 37% high from the lower band. And then you got few more, as you can see here. One of my favorite is Enphase Energy. It's a solar stock, as many of you know here. Stock has been dropping off late. I'll be patient and buy slowly and add to my position. This stock also can do very well. And for the folks who love energy, you could pick up some BTU here, Peabody Energy. It's been doing great. Look, 2 years, 683% performance here. You could look at this one also. It's almost at the middle band in Bollinger Band here. And we got few more, as you can scan through here. We got few stocks here. We got both Freeport-McMoRan, which is a bit of copper and gold type stock, and we got SolarEdge, which is solar stock. Look, Freeport has got nice net margin right now, 19%, and stock is sold off, as you can see here. This has been doing very well earlier, but stock sold off. You could look at this one also. And SolarEdge is one of my favorite stock here. This is also solar stock from Israel. You could take a look at this one also. All the solar stock have been down, as you can see here. You have to buy slowly and slowly add to position. Don't rush. Buy once, wait a couple days, buy some more. So that's the strategy here. And we got a few more here. Look, we got LTHM also sold off big time here. You could take a look at this one also here. This one has done nice in 2 years, as you can see here. And we got Mosaic, MOS. It's also a great one here. You could buy this one also. It also has done nicely, as you can see here. 528% in 2 years and 166% in 5 years. It's also a good one here. And we've got a few more, as you see here. We got Chinese solar stock here, Daqo Energy, one of my favorite. It's been dropping off big time, as you can see here. You got to be careful with Chinese names, but this one is a good one. And we got a few more here. We got Shopify, Equifax, all down, as you can see here. For this Shopify, you got to be careful here. You got to wait for it to bounce back a little bit, and then we should buy. But it's too early to buy a company like Shopify at this time. And then you got a few more, as you see here. We got Equifax. This could be a good one here. Let it cool off some more here, and then you can buy. Right now RSI is 31. This stock, as you can see here, has been dropping off for a while. I think it's good to wait slightly and then buy Equifax. All right, let's look at a few more here. We got a few more, as you can see here. Keep watching the net margin here. I like the one with nice net margin. And also keep watching 1 year, 5 year performance here. If they're doing well long term, and if they got some short term pain, you can pounce on those stocks here. I think both Match.com and Tech Resource, both are great here. Look, they got nice net margin. Especially Tech Resource has got great net margin here. You could buy these names slowly and add to your position. And look, Tech Resource has got nice cash on the balance sheet, as you can see here. And we got a few more, as you see here. We got a few more with nice net margin here. We got CG. CG is a good stock here. You could buy this one also. It's done nice performance, as you can see here. PAGS is a Brazilian stock. It's been down big time. This is, let's see, it's not done money to investors, as you can see here. Off late has been down. There is a lot of inflation worries. I think this one is you got to be careful with this Brazilian stock at these levels here, mainly because it's not made money for investors in a while. And we got a few more, as you can see. We got Generac. Generac came tumbling down big time, as you can see here. Look at the drop in Generac. It's been down for a while here. It's a great stock, but right now folks are not buying into Generac. I say, wait a little bit, let it come down slowly, and then you can buy. And I got a few more here. Zoom Info is one of my favorite. You could buy this great stock. It might come down a little more, but it's a quality stock. You could wait a little bit and buy this great company as it comes down. This company helps the sellers to make decision quickly by reaching the decision maker and providing decision maker information to sellers. And we got a few more here. One of my favorite is Next Era Energy. It's also a great player. Look, stock has not done well. It's done 34% in 2 years, and and 162% in 5 years. You could take a look at this one also. And we talked about Blackstone. It's one of my favorite stock here. Stock is down big time. You could buy some Blackstone. It's a quality stock. All right, so let's look at a few more here and go from there. Look, we got continuation here. Let's just move this slightly here. All right, so we got continuation going on here. Let's look at a few more names. As usual, keep watch on the net margin here. We want companies with nice net margin, and also we want companies with nice 2-year and 5-year performance. Those are your go-to stocks. They can keep doing well. And we got a few names here. We got one of my favorite is GFI. Just a low price stock here, has been consistently doing well, as you can see here. It came below its Bollinger Band in 20 day. You could buy this great stock. Look, 19% net margin. And we got MP Materials. It's it's been doing very well. You could buy some of MP Material also here. Nice net margin, as you can see here. And we got a few more. Meta has been down. Apps or Digital Turbine is one of my favorite stock. You could buy this one also. This is barely above its lower Bollinger Band, as you can see here. And we got a few more here. Big stocks like Facebook or Meta. It's a good one also to slowly buy into this weakness. This also got clobbered big time. And look how when the mighty fall, it falls big time. We got Nvidia, a great stock. Has been dropping off of late with this high growth names falling out of favor here. It's a great one to slowly buy. And we got a few more, as you see here. We got Fortinet, one of my favorite stock here, cybersecurity. You could buy this one also into this weakness here. They should also do very well. And we got Arista Network. It's again a great stock. They will also do very well. They've been dropping off big time. Look, they got nice 29% net margin. Not bad at all. And look, we got a few more here with nice net margin here. We got Zim. Zim also has dropped off big time here. 43% net margin. You could take a look at that one also. And we got a few more here. Matador, same story, nice net margin, and they also have done well in the past, so you could take a look at that one also. And we got a few more here. We got InMode and Square, both are my favorite. You could look at those also. All right, so with that, what we'll do is we look at two stocks in a little more detail. First one is Fortinet. It's the top leader in the cybersecurity. With everybody needing cybersecurity protection, this company can do very well. According to Investor Business Daily, this one is reaching its buy point. So I think it's a good one to take a look at. Look, today stock got clobbered here. Look, $19 down, 5% down today. And look, it's in a tight compression zone here. Stock has been trying to see where to go. Nice compression zone. So I think, around, I would probably wait slightly and buy it around, say, 300 range here. That's a good point here. Or if you're patient, you might get it a little lower also, around, say, this support level here, around 260 or 270. You might be lucky to get that also. I say buy in stages, buy some when it reaches around, say, $300, and you could buy some more if it comes down. It's a great company. Look at the run here, nice bull run. It's historically it's done very well. That's why it's a profitable company. You could slowly add to your position. All right, so as you look through Fortinet here, look, Nice growth here. They are growing their earnings very nicely, nice clip here, and they're also doing their revenue a nice clip, nice up clip here. That's a good one here. Shares outstanding coming down. They're not diluting their share count. That's a great here. Operating margin going nicely higher. Look, nice trajectory here. Good one here. Net margin also good, going higher. Only downside is looks like they took on more debt back in 2020 or later second half of 2020. I think they have to watch this. Probably they're not paying too much interest. They got some cheap debt. That's the reason they might have got it. But we'll take a look and see how much interest they're paying. So overall, I like this company. Look at they're doing great. They're doing nice sales, nice earnings, nice margins, increasing margins. Only exception is debt to equity and also share count dropping off. That's also great. So with that, let's look at this company into a little more detail. Look, Fortinet, we'll go through this very quickly. Debt is slightly high, as you can see here. Current ratio is nice. It's over 1. That's good. Low RSI tells the stock is sold off. High IV percentile. For the folks who want to sell some put option, you could do that way below current stock price. From a PE ratio perspective, a little high. PS ratio is also a little high. That's the reason this stock is getting punished. Analysts say buy recommendation. Technical rating says sell. This is when I get interested. It's the divergence between what analysts say and what technical analysis says. That's when you buy. And look, stock has been down in 1 day, 5 day, 10 days. It's been down 6 months and 1 year. Year to date also down. But look at the performance. 1 year up and 2 year, 5 year, 10 year all up nicely. And nice sales growth in 5 year, 1 year, quarter over quarter. And even growth expectation for this company for next year and this year is nice. And nice EPS growth this year, even in the future, next year, nice EPS growth. Stock has been doing very well, consistent winner, nice net margin of 18% here. And look, their cost of debt is just 1.50. They're paying a very low interest rate. That's the reason they got the debt. Not to worry, I think they will do well. All right, free cash flow positive company, that's great. And they will increase their free cash flow in out year 1 next year, and even in 5 years out from now, they will increase their free cash flow. That's a great one here. And from a moving average perspective, look, it's been down below its 30-day moving average. 30-day moving average, but it's slightly higher than its 200-day moving average. So I think it's doing very well here. From a Bollinger Band 50 perspective, 50-day Bollinger Band, it's up 50%, middle of the range mark. But in the 20-day period, it's sold off. It's below its lower band, as you can see here. So I think overall the stock is doing very well. And look, nice score here. Growth score 99. Value score is 58, slightly low because it's still high valuation. And look, from a Morningstar, they get a B grading. Financial, growth, and profitably all B grade. I think they're doing very well here. So with that, overall, I think it's a great company to buy. Take advantage of this pullback here. Buy some Fortinet, you will do well. All right, now let's look at Enphase Energy. This stock also came down. Looks like analysts reviews the sector and they think this solar sector can come down. So it's come down 11% today. So we got to take a look and see if it's worth buying here. There is concern about renewable energy with weighing demand amid of war in Ukraine, supply chain issues, and so on and so forth. Look, stock has been doing great in the past, and it went into consolidation mode, as you can see here. Nice consolidation box here, and stock is trying to see where to go. I think at these levels here, I would probably look for this support level here, about say 120, 130 level here. It might hit that level or be slowly buying at that level. I think this can be a good support level for this stock. Say around say 120 or 130 could be a nice support level for this stock here. All right, now let's look at the numbers for Enphase Energy. Look, it's a profitable company. Of late, earnings per share slightly increased from 107 to 109. That's a good trend. Sales is doing great here. Nice sales. I love this. Shares outstanding slightly increasing, but not to worry because sales is increasing nicely. This is not a huge dilution. Net margin or operating margin is increasing. That's a good sign here. Slight tapering down here, but overall trend is good. Same story with net margin. Overall trend is good. This company is paying down the debt. I like that. So I think they're doing well in that category here. Slightly increased, but not to worry. Still came down nicely from a debt perspective. All right, now let's look at the numbers here. Look, Enphase Energy, PE ratio 175, high PE ratio, PS ratio, price to sales ratio 18. That tells you this stock is not cheap. It's expensive from a valuation perspective. That's why it's coming down right now. Analysts say buy and technical rating says strong sell. That's when I kind of get interested in stocks like this one here and slowly start buying and accumulate. And look, next earnings is around the corner. You got to be watching out here. And stock has been getting clobbered here in 1 day, 10 day, 1 month, big time here. Nice performance in a longer term. That's why I like it here. Look at the 10-year performance here, 2,124 here. Nice sales growth as you can see here, and nice sales growth in the future, this year and next year. Great one here. This can do well. Analysts are bullish on this. And EPS growth is also good here for this year and next year. Also great here. And look, this stock has been getting clobbered here. Look at the moving average here. Stock is getting clobbered big time. I think that's when you can slowly start buying this company. And their cost of debt is 4.30%, but they don't have too much debt. I think there is some debt, as you can see here. The cost of debt is slightly high, but not too high. All right, so with that overall grade, as you can see here, this company gets 64 grade overall. Morningstar says grade A for growth, grade A in profitability, grade C in financial. That's a good one here. So with that, let's look at some more details here. From an earning history perspective, Enphase, look, they've done great here. They've been beating the Wall Street estimate all along, with the exception of 2018. This is when we had high inflation. And look, from a revenue also, they've been beating the revenue all along for a long time, as you can see here. And their revenue has been growing nicely, as you can see here. It was a $74 million revenue company back in 2017. Now it's $412 million revenue. That's a good clip here. They've been growing the revenue. With that, I think it's a great one to slowly start buying. It might come down slightly, but buy in chunks so that way you can average it down. It's a great company. So with that, thank you very much. Happy investing and trading. Please subscribe.